Ladies and gentlemen, all that stands between you and lunch is regulation. So this panel is about building and growing a global blockchain hub. I'm your moderator. My name is Mark Hochstein. I'm a managing editor at CoinDesk. And we have a great panel lined up, a lot of different global perspectives. And I'm going to ask each of the panelists to briefly introduce yourselves, starting with Tiana.
I'm Tina Baker-Taylor. I'm the Executive Director of Global Digital Finance, which is an industry membership body which is driving the creation of standards and best practices. And we also do policy outreach and advocacy with global policymakers.
I'm Moad Fahmy. I'm the Senior Advisor for FinTech at the Bermuda Monetary Authority. I lead the team that's responsible for the authorization and supervision of digital asset businesses under the Digital Asset Business Act. And the Bermuda Monetary Authority is the financial regulator for all financial sectors in Bermuda and is responsible for the issuance of the Bermuda dollar.
My name is Nick Giretto. I'm the Chief Executive of ADCA, the Australian Digital Commerce Association. It's the blockchain industry association in Australia, and we advocate for the responsible adoption of blockchain as rapidly as possible in Australia, including the digital currency side.
Okay. My name is Yuta Takanashi. I'm a Deputy Director for FinTech and Innovation at the Japanese Financial Regulator. And my main focus is on the G20 Japan presidency. So Japan will host the G20 this year, and we have a very big conference in the next month. So I'm working for this project. And also, I'm also the researcher at the Georgetown University, so I'm writing an academic paper on this topic.
So before I forget, in a little while, we'll be taking questions from the audience, and there will be a mic floating around in the room for you to ask questions of our panelists. But I want to start off the conversation sort of like from a very broad perspective, kind of the central question of this panel. You have these sort of two goals that a lot of jurisdictions are trying to balance. On the one hand, they want to attract blockchain industry. They see it as a growth industry. They see it as a driver of jobs. They see it as a driver of innovation. They see it as a way to make their city or their country a prosperous place. But there are regulatory imperatives that to varying degrees can come to tension with that. You have consumer protection, you have financial stability, you have the goal of preventing financial crime that we heard the Undersecretary talk about earlier. So just some high-level thoughts from the panel, on how, what's the best way to sort of balance those two imperatives? Start, Moad, you want to?
So I guess finance and technology and innovation is not something new for the BMA. We've taken the approach of promoting innovation in the financial sector with the insurance sector a long while ago. And we now became a leader in the reinsurance, captive insurance, and ILS space. And we want to somewhat replicate the model to the digital asset space, taking into account the specific risks of digital assets. And those risks have evolved over the last 10 years. So I think the right way to look at this is taking really the risk-based and proportional approach, keeping in mind our remit. And I think that as many more regulators put in place their framework now, the main difference is going to be how are they applied in practice. So I want to say that it's easy to replicate a legal framework, but implementing a way to manage innovation internally and having the right mindset, the right culture, is going to be the main differentiating factor as more jurisdictions move into this space.
And you mentioned a very important concept, which is the idea of risk-based and sort of proportional approaches. Can just to help the people understand, what's an example of taking a risk-based approach to regulation and a proportional approach?
Well, yeah, okay. So let's say 10 years ago when the regulators were looking at Bitcoin, you'd see a lot of discussions around financial crime, the use of Bitcoin for the purchase of drugs and whatnot on Silk Road. And now, when you think about the evolution of this sector, you can see that the questions are more around how do we have sufficient liquidity, what's the interaction with the financial, the rest of the financial sector, how do we provide sound financial benchmarks for the use of digital assets underlying in the derivative space. All of these questions need different answers. So when we look at a company, and that's something that comes from our insurance sector, we ask them to really think about, what risks does my business model involve? What is my risk appetite? What are my risk mitigation measures? And how do I ensure that this is going to be a business model that has got the ability to survive and ensure that customers are properly protected? So we do put some safeguards in there, but a lot of the thinking must be done ex ante by the entity itself.
Yuta, talk about how Japan is trying to balance these sort of two objectives we're talking about, fostering growth in blockchain while protecting against the risks that regulation was designed to protect against.
I think it's a very difficult question actually. So there's no answer. There's no right answer, and I myself want to know the right answer. But basically, the bottom line is we are the financial regulators. We need to achieve the regulatory goals, such as the financial stability and consumer protection, and also the preventing financial crimes. All of these concept is very important for the society, not for the regulators, but for the society. So we need to achieve these goals. But at the same time, especially in the blockchain-based finance, it is very interesting characteristics there. So it is happening in the cyberspace. So usually it is managed by the computer code. So if we think about these characteristics, the regulation alone will not be the only one factor to achieve regulatory goals. We can utilize the computer code or certain type of the market structure or the social norms. We have all different factors to achieve the regulatory goals. So especially in the computer code, it is very interesting because at this moment, usually the regulators utilize natural language regulation. So like regulating activities and then enforce the regulations. But in the case of the internet-based activities, probably the computer code provides some ways to enforce the regulation automatically. So we can utilize all different factors. So if we can create some computer codes that will help us to achieve regulatory goals, probably we don't need to regulate the activities. So especially in the blockchain.
Are you saying code is law?
Yeah, so it's very idealistic and very conceptual, but at the same time, we should think about the possibility of using this concept. So in that sense, if we can create some cooperative environment between the regulators and the engineers or code developers, probably we can work together to create some solution in a more clever way. So like without regulating, achieving a regulation. Yeah.
I don't know if you, I'm sorry if I'm jumping in. Have you seen the projects by the FCA of machine executable rules? Is that something that you kind of think about when you?
Yeah, so at this moment, I think there are several programs or projects that is working on this kind of concept, but it's very localized or not so global space. So Japan will host the G20 this year. So probably we can discuss in a more global regulatory space on the concept we can utilize different ways to achieve the regulatory goals. Not just Coda's law, but regulation is not the only mechanism to achieve the regulatory goals. And also we can work together. The different stakeholders can work together to achieve regulatory goals.
In one of the opening keynotes, the Undersecretary of the Treasury mentioned that there's guidance coming from the FATF, which is one of these transnational bodies, coming as soon as June. And and there's also been sort of a broader discussion of, within the G20 of creating global standards for regulation. And it's really interesting in light of the fact that this is a whole industry and a whole technology that's sort of premised on decentralization. So it feels somewhat ironic. But Tiana, can you talk about, is it even possible, much less desirable, to have like a global standard or a global set of rules? And also from as an industry advocate, how do you put up a united front for an industry that, again, is premised on decentralization and can be sometimes maybe a little bit fractious?
Sure. So is it possible to have a harmonization globally? I think that one regulatory regime that is global in nature is probably not achievable for a number of reasons. So, regulation comes from legislation. Different legislative frameworks in different countries are based on, the moral and cultural foundations of that country. Broadly, there's some similarities, but laws are always going to be different in different countries. What we can do is both industry, and we have not been traditionally very good at that, work together to come up with, common taxonomies, common touch points where we can agree, where we have a vested interest to work together. And similarly, with the regulatory community, there are initiatives underway like GFIN, which pulls together, don't quote me on this, might be 23 different jurisdictions.
25.
25. 35. I was going to say 32. I keep getting confused between 23 and 32, but 35 regulators who, as opposed to having to go to, let's say you want to test a project in the US, the UK, and Singapore. You would have to go into each one of those sandboxes and fill out all the applications and talk them through your project, and then have to coordinate those 3 jurisdictions yourself. GFIN is designed to go to GFIN with one application, and the countries, the regulators, will coordinate how they're going to work together. And I think that's really powerful when we're looking at trying to work interoperably across jurisdictions. So standards are a way today that industry can come together to set a playing field for what is best practice. Not necessarily what the law requires or what a emerging or fluid regulatory framework might dictate today, but what do we want to ascribe to? What do we want to strive toward? And I think that that's really compelling. And we've seen, personally at GDF, we have participants from 50 different countries, probably, that are contributing to those. So the global regulators are then looking at what we're putting together, and I think in a lot of cases we're able to influence what those policies then end up being. And FATF is a great example of that. So, should they be centralized? I think that there are key areas where governments and regulators are charged with protecting consumers. One of those things is preventing financial crime. I don't think anybody in crypto wants to be responsible for funding terrorism or human trafficking. These things are not okay. And so where is the balance between not stifling the innovation but ensuring that people are being protected? And I think that's the trade-off. So FATF is a great example of asking for industry consultation, bringing industry together, spending an entire day hearing from the industry, and then feeding back to them the following day what they've heard. And I think at the beginning of that, there were some things...
You're referring to the consultative meeting that I think occurred last week?
Yes. So there was a consultation in February. Then FATF invited the industry to meet at the beginning of this week, the 6th and the 7th. So there was 2-day meetings, and then following those meetings, we expected some policy confirmation in potentially June. But what happened during that meeting was quite powerful in that I think that there was a idea about the way forward, and industry was compelling enough together. And this is where, you know, the camps of crypto need to sometimes put their ideology aside and agree on the thing that we can collectively come together to advocate for as a unified front. And in this case, FATF has now said, okay, if there's another way for industry to potentially tackle this problem, we're open to your ideas. And that was an incredible, powerful result, I think. I think you would agree with that.
Yeah. I guess the first thing I want to say is I think this whole conversation about innovation versus regulatory goals is a false dichotomy, right? There is no trade-off between being pro-innovation and having a stable, sensible regulatory environment. The path to innovation is through creating tools that will provide consumer protection, stable markets, etc. Right? And that's a really important framing concept that people need to unite around to begin with as a cultural and educational thing. What that does mean, I think, is that there are times when the precise regulatory model that is currently used does need to be looked at again, not because the goals are wrong, but because the technical execution might need to be updated for new models.
Example.
Right? Pardon?
An example.
Well, I mean, out of this FATF thing, for example, you know, we may well see some progress towards not only unified principles around how KYC should be assessed, but also some mechanisms that people could unite around about the way to do that. And interestingly, it's quite likely that in that example and maybe some others, that the technology that will actually enable that will itself be blockchain. So this is where you get the pro-innovation boost out of that regulatory alignment. Right? We actually have the opportunity to rethink regulatory models. You know, the classic regulatory model at the moment in most countries relies on licensing, and it relies on reporting and audit at the back end. And both of those processes come with very high transaction costs. Now, they're necessary transaction costs in the way the economy works today because they provide benefit. But if you can deploy the technology in a way that means, and what Yuta is hinting at, where more of the transactions are actually compliant by design, where transactions are compliant up front, and you have code or other tools that are enforcing most of that, then you shift the balance, you actually take a whole lot of cost out, and you allow you know, the same goals to be achieved in a more efficient and more effective way.
I think what's really interesting too about this particular panel is you have two jurisdictions that have approached the regulatory frameworks from a fresh pair of eyes. A recent report just came out from Cambridge University. I encourage you to look at it, from the Center of Alternative Finance, which did a study over the last 6 months and interviewed 30-odd regulators around how they're approaching crypto assets. And 70% of them are using a retrofit version of existing regulation. Only something like 15% of them are creating net new, and then there's, like, you know, the difference in between. So I think if you are able to step back and see where the technology can solve some of these problems and be open to exploring those ideas, you will get to a more fit for purpose instead of a square peg, round hole approach. And I think that's one of the areas where in this particular FATF case, they did listen to industry to.
Are you optimistic that because for those who aren't familiar, I think part of what was at issue here was that the FATF wanted crypto exchange companies to basically implement the old travel rule and sort of have identifying information for both the sender and receiver of transactions.
Correct.
For everything.
Correct.
Which I think if you know crypto.
For any transfer of value.
Any
So a lot of this, again, has to do with the language. So is it money or is it value? If it's value, gosh, that's wide. And a virtual asset provider, who is that? Is it just exchanges? Is it wallets? Like, who sits in that bucket? So some of this is just around refining the language. Who exactly are you talking about, and what exactly do you want them to do?
But you sound optimistic that the final guidance is not going to go there.
Oh, I don't, not.
Or am I?
I'm forever an optimist,
Okay.
so I always expect good things.
So since we're more than two-thirds through, I wanted to open up for questions. So there will be a microphone going around the audience. Who has questions? The gentleman in the front.
Hi, good panel, thanks. My name is Rod Brennan with Luca, and we're working on some research around regulation for financial reporting and asset classification for crypto and crypto assets. And I was just wondering if any feelings on that. I know it's interesting that Australia and Japan are both here because they've kind of led the way, Japan in terms of codifying financial reporting for actively traded crypto assets, and a letter of intent from Australia. And we came up with a proposal of a way to handle it that bridges both US GAAP and IFRS through the concept statement number 8. But I was just wondering, is that an area that we can reach a consensus on, sooner rather than later in terms of financial reporting, both asset classification and valuation? Just your thoughts.
So in other words, just basic accounting rules, generally accepted accounting principles and whatnot. Is that something?
Well, I'm willing to give the Bermudan perspective. So we're actively working with CPA Bermuda on this specific issue, but of course the question of standards, and I was going to mention that earlier, standards kind of take time. So we're providing some flexibility around that for our potential registrants, and we intend on providing statutory account rules that licensed entities will be providing to the regulator for the purpose of supervision, while the standard setters do their thing.
Other thoughts?
I guess I would say the obvious driver here is the market itself. And what I mean by that is, let's see, 3 years ago now, when I was newly in this role, the Australian Accounting Standards Board, with some help from us, wrote a letter to the IASB suggesting that they should take on the job of helping develop some standards. And that got nowhere. There was no support at the time 3 years ago. We then had a couple of instances in Australia where, for example, there was a significant float where crypto assets were a large part of the value of the company that was trying to be floated. And the absence of standards meant that there was no way to actually do that. And in the end, they couldn't proceed through the listings process because there was no language for the valuation to be conducted, the valuation discussion to be conducted in. So the market then said, okay, well, this is a gap. We now need to develop some de facto standards. And eventually we should see then pressure that'll take it through to more formal de jure standards. So market pressure will drive the change. Doing it as an abstract exercise, you can try to crystal ball, but in the end, you've got to respond to some of these economic pressures, I think.
We're kicking off a accounting standards reporting and valuation working group. So timely question. I invite you, literally, get in touch with me if you would like to participate in that global working group. You're more than welcome. We'll be working on that next, actually.
Has the FASB said anything about? I'm curious. The Financial Accounting Standards Board in the U.S. said anything about this stuff?
No, neither the FASB nor the IFRS have come out with any guidance. But with this research that we've been working on, we have some really good support from them, and we've shared it with the chairs of both groups. And it's kind of a convergent approach because they're, as a long-lived intangible asset, which is the way it's being classified in practice under IFRS and US GAAP. You can't do it, for an actively traded asset, and we're arguing for fair value like a lot of other people are right now. So,
other questions? No other questions.
Well, there's one thing that I would like to add on the
Please.
standard setting. So standards are not always the most desirable outcome, especially as something is relatively new. But when standards are not available, you need to have some flexibility and some general values around which you're going to use that flexibility. So for the purpose of GFIN that Tina mentioned earlier, so Bermuda is a member of GFIN, and we made the conscious decision within GFIN to not go into standard setting because, first of all, there are other bodies who are responsible for that, but also because it would have taken at least a year to, get 30-something regulators to agree on what a cross-border trial should look like. So we decided instead that, we'd give it a try and iterate on it. And, standards is kind of a little bit of the opposite of iteration is, the ultimate response. So, yeah.
Hi, this is a really good panel. I'm Judy Reinerson. One of the things I agree entirely with what Nick said was that when you're talking regulation, you're talking licensing together with, standards and compliance and reporting. In your jurisdictions, do you have anything like the 40 to 50 licenses that are required in our jurisdiction? I think that's one of the biggest things holding the United States back.
Yeah. Certainly, I'll make a plug for Australia. One advantage we have, although we're a federal system, the same as the US, when it comes to regulation in this area, our states have almost no regulatory authority. So if you are launching a business in this space in Australia, you're talking to 3 or 4 key regulators as opposed to 50 times 5 or whatever it is that you need to do here in the US. So that does make it a little bit easier.
Yeah, Japan is also we have only one regulator, so it's very easy to come to us to talk to have a license. But still, it is a very new area, so we need to investigate a lot of things, but it takes time. But at least we have only one regulator.
Same thing with Bermuda, just one regulator, and sometimes it looks like you have 60,000 population, looks like you have more regulators in the US than we have population.
Although that's probably one of the advantages of being a small island is that you don't have those kind of overlapping conflicts. So look, it's time to wrap it up. But this has been a great panel. I wish we could continue the discussion. I think, but it's time to head for lunch. But I want to thank everyone for listening, for great questions, and thank you to the panelists.